You're not going to believe what just happened at Crowdstreet. They let their investors get totally hosed in these two deals they've been working on. I haven't done a review of Crowdstreet yet because honestly, REITs don't really get me that inspired. They're pretty boring. You're dealing with big players, big money. Your returns aren't as awesome as what you can get on smaller platforms. REITs deal with big commercial properties, and they deal with a lot of douchebag partners because in that world, that big finance world, yeah, stuff happens. So I'm going to show you what happened here at CrowdStreet. But first, so you guys that are new to this channel know, my name is Brian Johnson. I'm a real estate broker. I've been a broker my whole life. And this channel is all about online real estate investing, ways that you can invest in real estate right here from your computer without having credit checks, and no one cares about your income. And you can do it with small dollar amounts. So if you're interested in that kind of content, this channel is for you. So this is what came across my desk. On Yahoo Finance, hundreds of regular investors who together put up $63 million to buy pieces of Atlanta and Miami commercial real estate have allegedly seen their funds disappear. Now, let me pause 1 second on this. When it says regular investors, this is the accredited investors that got hosed in this deal. So that's not retail. That's not necessarily regular investors. That's sort of a deceptive little part of this article. It is accredited investors only, and that's bigger dollar people that have substantial net worths. And the minimum investment in CrowdStreet at this level, I think we'll get to it in a second, but it's $23,000 or $25,000. Two deals orchestrated by CrowdStreet, a real estate investment company that crowdsources funds from relatively wealthy individuals, have fallen apart as investors' money vanished from bank accounts earmarked to buy equity in buildings. An independent manager brought in to look at how the deals went sour found millions of dollars of the crowdfunded cash ended up in accounts controlled by Nightingale Properties, a firm CrowdStreet partnered with on the transactions. Now, of course, CrowdStreet is going to be running for their lawyers to cover their asses on this because there's probably going to be a bunch of lawsuits because they really didn't do the proper due diligence that you would do in a real estate transaction. And we'll get to that part here in a second. So Nightingale, it's based in New York, has a chief executive officer, Eli Schwartz, did not respond to requests for comments. So in order to properly investigate this, CrowdStreet had to assign an independent manager to do this. The only real way they say that they can do a proper investigation in this was to put these two entities, these two, investment entities into bankruptcy. And then when something's in bankruptcy, then you can start, doing deeper investigations into documents and the financial fraud or whatever it was that went on here. CrowdStreet raised funds from accredited investors through its online platform and put the money in two shell companies. You've got to be kidding me. Which Nightingale was supposed to use to buy the properties, a sprawling office complex in Atlanta's affluent Buckhead neighborhood and a mixed-use building in Miami Beach. You guys see the problem yet? The minimum investment from accredited investors was $25,000. After pulling in more money from other investors and putting in its own equity, Nightingale was supposed to facilitate the deals according to court papers. In the meantime, the firm was expected to leave the CrowdStreet investors' money in two different entities, untouched. They were supposed to leave it in two different entities, untouched. Here's the problem. Any of you out there watching this right now that have been involved in real estate, even a small amount of time, can probably see what's going on here, where the problem was. Why was this money not put into an escrow account? Why was this money put into accounts that this Nightingale company had access to, and CrowdStreet just wasn't paying attention? They weren't auditing this. I'll get to that in a second. Now, there's this other article in therealdeal.com. It's a real estate sort of website newsletter. I also get that one that just talks about some highlights of what's going on in the markets. It's actually a pretty good site, pretty good, interesting information. And it says CrowdStreet response after Nightingale fiasco. Oh, they responded poorly. If you go to their website, there's nothing there at CrowdStreet that I could find in their news section about talking to investors about this. Super embarrassing for them. It should be, because they weren't even having money, millions, looks like 60, 70, or some more millions of dollars sitting in non-escrow accounts. This is a great highlight here, right here from this article, you guys. The fracas had industry observers asking a pointed question. Why did CrowdStreet release investor money before any deals closed? So what CrowdStreet's doing, they're the middleman. They're saying that they're sourcing funds from us. I love this part right here on this tweet. CrowdStreet, you facilitated a $50 million raise. Actually, it was more than that, on a $180 million buy and didn't even check it if it ever closed. That's really what happened. They didn't check. The money was sitting in their accounts and they didn't check. I love this one, this tweet from Tyler Castleberg. Will this be the end of CrowdStreet? And it's just quoting someone else. This is one of the most important real estate articles written. It cuts at the heart of low interest rate startups, investor frenzy, accredited standards, crowdfunding, resulting in $50 million in losses by retail investors on a deal that never closed. That's so true. Instead of sitting in escrow, investors' money went to two separate accounts controlled by Nightingale. Schwartz and Nightingale were held to an operating agreement mandating the funds would only be used for those two projects. Now, this part right here is why I'm going to say don't invest in CrowdStreet, because this is the top guy. This is the leadership, and he is throwing us under the bus, and he is running for the exits. We have never experienced anything like this, CrowdStreet CEO Tor Steen said in a Monday interview with The Real Deal. He stressed that the company is a marketplace platform and does not take custody of the investor funds. He's already running for the exits. He's already going for protection. They're not going to, investors who put money in these two deals are probably going to get nothing back because there's no assets owned. Now, if the bankruptcy court decides to go after CrowdStreet for their other assets on this, who knows? Bankruptcy courts, lawyers are genius in bankruptcy courts of chasing down every single penny when it comes to fraud investigations. Just go look up the old news on the Enron bankruptcy. Those lawyers went after everything. They dig in and they go after every penny they can go find in those fraud investigations and after bankruptcy. CrowdStreet's investor communications show that the company recently amended its escrow policy. I bet they did. As of June 5th, CrowdStreet's deals are funded through third-party escrow accounts as part of the firm's transition to acting as a securities broker. The funds in the escrow accounts will only be released when the sponsor is set to close on the deal. The escrow requirement was slated for August, but was accelerated. Of course it was accelerated. They just got ripped off. They're in the news. Everyone's talking. Well, not everyone. No one's really talking about it. I'm talking about it. And they were actually waiting to implement an escrow process until August. Escrow process is the first thing that you need to have when you're doing these sort of real estate transactions. You can implement it instantly. Here's a choice quote from Tor Steen. We chose to move it up as an extra degree of protection. They chose to move it up so they would have the minimum protection. And they had no protection before. No one will ask them about this, but you go look at all their stuff on their website. They're going to talk all about investor protection, and they're looking out for the little guy, and it's safe and it's secure, blah, 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 blah. So here's a quote from a distressed debt expert. This is great. I was surprised at how little oversight CrowdStreet had over the particulars of the transaction and how little insight into the books and records they had. They literally have no idea what happened to all of the money. Here's another weasel statement from CrowdStreet from their letter to their investors. The letter notes that CrowdStreet is not party to the transactions, however, and does not have control over the operations or management of investments. So let's do a quick platform review of CrowdStreet. I'll do it right now. Due to the fact that they aren't paying attention, they don't look at the details, and they just lost a ton of money for their investors, I would give CrowdStreet a thumbs down. I would not invest in that platform, because when something like this happens, it tells you that the leadership at the top, they're not paying attention, and they're probably going to continue to not pay attention because that's just the way people are.